You are listening to chartingwealth.com for Friday the 5th of January 2017. It is great to have you with us today. We know that a lot of us here on the East Coast are quite cold and have been snowed in, as I was today, but coming to you live nonetheless. Happy to present you with where the markets went over the course of the day. We'll start off with the S&P 500 up 0.42%. Remember, we had a pullback in the prior week, that last week of December. We had a red open box candle. Again, not a closed box, so it's not those that make you shudder when the market starts to move down, as we saw those 3 weeks starting the week ending the 11th of August. And going down for 3 weeks through the end of August, ending on Friday the 25th of August. And from then, almost unabated up moves, a little bit of a spinning top on the 17th of November. But other than that, this prior week, we had a red open box candle. And again, I do encourage you to take our training online on the Heiken Ashi candlesticks. These are different than your typical candlesticks. We love them because of the accuracy they provide us. So, bit of a pullback that prior week, but a strong week so far. We have the price percent oscillator moving up strongly, pushing away from the red signal line. It had been heading toward it the prior week. We see the derivative oscillator continuing to lose energy, but again, that's the derivative oscillator, has its own meanings. We have a good teaching on that if you'd like to know more about it, but our master indicator, of course, is the price percent oscillator. Now, as we go from the weekly to the 2-day, we can see that the 2-day crossed over going down back on the 29th, and then what did it do with 29th, the last day of the trading year for 2017? That 2-day candle crossed over going down and then popped right back over, moving up for the 2-day candle ending Thursday, the 4th of January, and actually a strong up move, never crossed over the weekly trend line going down, but again, just really slid sideways from the last up day, the real strong up day, the 19th of December, up 2-day candle. From Tuesday the 19th of December, things just sort of slid sideways, which can be expected on the week following Christmas. Why? Because, of course, the market, even though you can have Santa Claus rallies and such, the market actually doesn't have the real hardcore folks that are there trading, sort of the caretakers. A lot of folks are on vacation. So that sort of sideways sliding week doesn't necessarily surprise us, but the market started off with a bang, particularly here toward the end of the first trading week, even with the bad weather and everything. Again, an up day. Derivative oscillators gaining energy, and of course the price percent oscillator is heading up and away from the red signal line. What do we see on the 4-hour chart? It crossed over, moving up back in the morning on Wednesday the 3rd. In fact, it had already started moving up all the way back in the opening of the market on Tuesday. Remember, market was closed Monday for New Year's Day, but was open Tuesday, started moving up then. That crossover occurred on the morning of the 3rd, and it's really just been up since then. We do see that things topped out around the same point at 271.70, 271.68, something like that. Both the morning candle and the afternoon candle. So again, just keep your eye on the prize. We do have both our 2-day now moving in the same direction as our weekly chart. Of course, what we would do traditionally is wait for a pullback on the 4-hour chart and then jump in to ride that baby up. We'll just continue to monitor things, keep our eye on the S&P 500. What do we see going on QQQ? Well, we had that down week with a very weak weekly vertical crossover going down, as we explained to you. And of course, now things are trying to move around as we look at the weekly chart. Derivative oscillators continuing to lose energy, but we do see the price percent oscillator bouncing off that red signal line and moving up. In fact, the movement's almost been enough to erase that crossover, which is very interesting. We'll get rid of the black, almost erase it. You can see that it never really came to much fruition. So far, don't expect a huge down day on Friday. If that occurred, of course, it could rotate everything back over. Not likely. What do we see going on as far as the weekly chart goes? Well, remember, we gave you that caveat. Look at the market at 10:30 on Monday morning, and of course, it was spiraling upwards, as we, of course, see from our 4-hour chart. Things took off on Monday and moved up green candlesticks all the way up until actually the end of the day on Thursday. But we'll get there in just a minute. Just to wrap up on the weekly chart, derivative oscillator, like we said, losing energy, losing upward momentum, but the price percent oscillator has crossed over going up, and we have a green open box candle that is strong. You can see from that green open box candle also that we did have a confirmed crossover going up with the closing of the candle, the 2-day candle on the 4th of January. We have a big open box candle pushing through the Bollinger Bands, the volatility bands, strong up movement. Derivative oscillator also flipped over at the same time the price percent oscillator is, which is typically a good sign for continued movement. And again, that 4-hour chart, strong up movement in the morning, tempered a little bit in the afternoon. Derivative oscillator continuing to gain energy. Price percent oscillator not moving up at the same strong angle it had been the 2 prior days, but again, still moving up quite nicely. So keep your eye on the prize. We will announce to you, of course, at the close of the week whether we change that weekly vertical crossover back to an up one. Doesn't typically happen, but again, with that weird end of the year week, it has potentially. We'll see. We'll call it when it occurs. And of course, candles are not drawn until the last portion of time. And for the 5-day candle, really a shortened 4-day candle for this week, that'll happen on Friday at the close of business. We'll let you know, all of you who subscribe to our service, our texting service in the States, will know. The rest of you, again, just listen like you always do to the comprehensive review and forecast that we'll record tomorrow afternoon after the market close. Back to the weekly chart into TLT. That's the 20-year bond. Now, it crossed over going up all the way back on the week ending the 1st of December, up the 2 prior weeks, down 2 weeks after that, the week ending the 22nd of December, the week ending the 29th. So far, we have pretty much a green spinning top with a long wick on the bottom, but again, and really more of a sideways slide than strong up movement, because so far the candle is about half the size of the prior down candle for the week ending the 29th of December. For the day, TLT was actually down 0.02, so 0.2% down. That's almost flat. So again, we do see it appears to be moving toward a crossover going down on the weekly chart. Hasn't happened yet. Derivative oscillator still in the positive. So we'll continue to watch. If it does cross over going down, we, of course, will give you that call. We'll see how things finish up on Friday. What do we see going on the 20-year bond fund when it comes to the 2-day candle? Well, of course, it crossed over going down quite strongly back on Thursday, the 21st of December, and has really been sliding sideways. It tended up for 3 2-day candles through the 29th, through Friday the 29th of December, and then really just sideways so far for this first week of the year. Still in the negative, derivative oscillator losing downward momentum, pretty much flat for the price percent oscillator. So we'll continue to keep our eye on the prize and see which way it's actually gonna go, particularly on that big chart. What do we see on the 4-hour chart for the last day? Down in the morning, and then some recovery, a spinning top in the afternoon. So again, that sideways slide continuing to show itself. For technically, we're still up on the price percent oscillator as far as the 4-hour chart goes, whereas the derivative oscillator continues to gain downward momentum. So again, oscillators don't work well when price slides sideways. You need a trending market for oscillators to work. And of course, when we don't have a trending market, we are not in that market. We're waiting for the market to move in one direction or the other. That's what we're looking for as far as 20-year bonds go. We'll continue to see how this market settles out. which way it goes at the beginning of the year. Lastly, we'll go to gold. Gold up 0.51%, our biggest gainer for the day, 0.51%. Of course, it looks like gold is going to have a weekly vertical crossover going up by the end of the week unless there's a bad down day on Friday. Looks like we will have a confirmed weekly vertical crossover on gold. We see both the derivative oscillator crossing and the price percent oscillator. And again, gold is just rocketing up in price. Third week in a row is what it looks like it will be. We look at the 2-day chart. What do we see? It crossed over going up back on the 22nd. Had actually started moving up all the way back on the 13th of December after bottoming out on that 2-day candle back on the 11th. And again, gold has just been rocketing up strongly. And of course, as we look at the 4-hour chart, what do we see? Well, that 4-hour chart is beautiful. We saw it originally cross over going up back on the morning of the 14th, Thursday, the 14th of December, and has gained mightily since then. The jumping in point somewhere at the opening in the afternoon at let's see, crossed over in the afternoon. So somewhere around 10, what do we say, around probably 119.50, all the way up to its high around 125. No, actually higher than that, 125.85. So again, beautiful. Had that bit of a pullback at the end of the day on Wednesday. Told you to continue to keep an eye on things. And of course, what did it do? Bump up in the morning on Thursday and in the afternoon. But again, we see the price percent oscillator going a little flat on us. Derivative oscillators continuing to lose downward momentum. So keep your eye on that 4-hour chart for those of you who are using it as your total trading chart. And of course, we're about to have that weekly vertical crossover going up to add to the mix. Folks, that's where we are as we end the day on Thursday and go into Friday, the 5th of January. We so appreciate you being with us. We love to hear from you. We will republish for all of you that missed the quarterly chart review. We will republish that over the weekend with a comprehensive review and forecast. So if you've not signed up for and are not receiving our newsletter, our daily email, the daily chart review that we do, make sure that you do that as you're listening to this broadcast right now, because we will republish the quarterly chart review for all of you who are interested. It is, of course, the prescient, unbelievably accurate quarterly chart. We also share the chart with you that over the last 20 years has just been incredible in the accuracy, getting you out of the market when it started to crash there late in 2000, getting you back into the market as it started to rocket up. Actually was in the process of rocketing up, but we had the confirmation on the quarterly back in early 2005, got you out of the market as it started to crash in mid-2008, got you back in the market for the run-up in about, April of 2011. Just an absolutely beautiful chart. We share with you where it is with its current state at the end of this most recent quarter. So important, valuable training. We also have the initial training that we offer to everybody available too, and we'll put that up for you also in the email and share that quarterly chart training with you as well as the quarterly chart review. Make sure you go to chartingwealth.com, put in your name, your email address, and you'll get it all, my friends, on the comprehensive review and forecast we'll be recording on Friday for the Monday review. Thanks so much, my friends. God bless. All the best from the entire team here at Charting Wealth World Headquarters.